Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back on this magnificent Monday for another daily market update. For those of you that are new around here, every single day at 1 p.m. we release a daily market update where we don't just look at the crypto space, but we look at the markets in general, and we try and relate them to crypto to work out where we think this small but exceptionally significant and to become infinitely more significant space is heading. So it is Monday. It is the start of a new week in the traditional markets. We're going to be looking at a number of things. I want to take an objective look at Bitcoin, first of all, on a naked chart. And just look at where we're at, because we're at this kind of key level that we seem to be churning around of course, the sort of 30K range. 30K, it has been historical support, certainly in 2021, 2022. And we now find ourselves reflecting on it as resistance. And also just relate things to a little bit of the environment that we're in. You know, we have been long, rightly so, really since January. And actually, when we've been long, the vast majority have been short. They've been expecting a 2008, which we can look at 2008 versus the S&P today if you want. And that's been quite encouraging, you know, and this is often how the markets work. The markets are very good at taking money from one group of people into the hands of the others. And it's usually the majority that they take money off of. If you think about who makes money in markets, it's usually a very small percentage of the overall people. So as we find ourselves at 30K, and I start to go on Twitter and see everybody talking about being max long, which was one of Raul's tweets, not to pick on Raul, that makes me a little bit nervous. And as more and more people flip to the bull side, you know, I think there's always caution that needs to be taken. Now, that being said, we are still bullish. We still have targets of above 40K for Bitcoin. We think, and actually I released a course yesterday talking about the 4 stages of a market to my Patreon members. Lots more courses to come. Get on board with the Patreon if you're not already. It's a very reasonable price for the information that you'll get every single month. And we also uploaded a weekly meeting just yesterday. We take a lot more of an in-depth look at everything. But you always have to be a little bit cautious and consistently check your bias, I think. And we're going to do a little bit of that in this video. We're going to be talking about this liquidity crunch. We know that the environment that we're in is very strenuous on debt, which takes money from people. You know, if you look at why Jerome Powell and other central banks upped interest rates to begin with, it was to kill inflation, and how they were planning on doing that, which is why we got the hell out of the markets in 2022, was by bringing demand in line with supply, right? So essentially what they're doing is taking dollars, quantitative tightening out of the system and into a debt market. Now, liquidity, I think, this liquidity crunch can be looked at from a number of angles. And I want to look at it from all angles: the bull side, the bear side, the factual side, which often both the bulls and the bears miss out to try and fit their own narrative. But I think this liquidity crunch requires a lot more nuanced. Just like when the debt ceiling was raised, everyone came out and goes, oh no, this is like a 2019, which led to a crash in the repo market. And we said, no, that's not the case, because if you look at what's in the reverse repo market, which we're going to do here, which is getting drained at the moment due to the Treasury using it as a source of funds, which is a good thing for us as markets, because it means they're not taking out the markets, taking out the reverse repo market, which had over 2 trillion. We're currently rapidly declining, actually, in terms of that market. But there's nuance that needs to be applied, I think, to this liquidity crunch. You know, you could use the M2, for example, and say, okay, well, this is very simple and you just have to use this. This is collapsing, so the markets will collapse with it. Well, actually, the markets have shown a contradictory stance to that. You know, they've gone up whilst the M2's gone down. And then we do have a chart where we look at kind of 3 main metrics of liquidity. And actually, you can see the markets are very much in tune with that. But we're going to do all that in this video. First thing I really want to do, first of all, it's definitely worth mentioning that it is earnings season in the United States. Tomorrow, we've got the Bank of America Corp. Expecting some interesting figures out of that. Morgan Stanley, of course, and then we've got Goldman Sachs, International Business Machine, Netflix, and Tesla. Then on Thursday, we've got Blackstone, Johnson & Johnson, Newmount, Philip Morris. We've got Taiwan. We've got Intuitive Surgical, and we've got American Express and SLB. So it is earnings season. Obviously, the week after that, significantly more. Things like Meta, a lot of the S&P getting sort of rolled up here, and then we are well and truly into earnings season. So it's going to be interesting. The stock market, we've been very right on in regards to... I'll just have to check what I've got drawn on here. In regards to the direction. And it's followed it very, very well. You know, our kind of poster child, if you will, has done brilliantly and really been a good indication. You know, this is such a textbook reversal. Anybody that's, again, interested in learning more about the markets, how to navigate them, we did a brilliant course yesterday where we looked at, or we released a brilliant course yesterday, we looked at stages of a market. Things become very clear when you understand those stages. But it's very much gone in the direction that we wanted it to. And we expect new all-time highs for the stock market, the S&P. You know, if you look at, and we've done lots, and we're one of the only channels to do this, by the way. Most channels have missed this out because they don't want to, you know, they only see interest rates as a perpetual negative, and in many ways they are. But at what point does QT become QE? And people say, well, that's the most ridiculous statement they've ever heard. But no, if you actually look at government spending, it has to increase. If you look at almost the devaluation of the dollar, which is pegged to most currencies as a result of this extraordinary, colossal debt cloud that we have above us and the interest rates, then you know, it becomes very interesting. But this is the last. Every single time that interest rates have stopped going up after aggressive tightening, and we've missed one out here that we'll put on. You know, this is a fundamental reason why we're long. I have not heard any other channel talk about this specifically. And actually, not only do we have the technical structure here to suggest this, we've got the theoretical, and then we've looked at Bitcoin against the SPY. You know, most other channels don't do this. Yeah, we're not a macroeconomist. I think most macroeconomists out there are full of shit. You know, because Ray Dalio has wrote an amazing book. Ray Dalio responsible for the chicken nugget, by the way. He wouldn't have the chicken nugget would never have came to market if it wasn't for him figuring out how to get fixed prices on both grain for the chicken feeders and then chickens for McDonald's. But you've got to. Computers can't critically think like humans just yet, right? They can't react in the same kind of manner. You need somebody to think about everything and put it all together. And I think actually, you know, we're very much still on the long side. Just somewhat worried about going to a naked chart, looking at these weekly candles. There's a lot of indecision, and you should expect it. You know, if you look at 30K, which is where we're currently at, look at all the points of contact. You know, this is a kind of, you guys know your Wall Street cheat sheets, your kind of market ebb and flows. You're very much doing that, and we do still expect upside, but it's at a kind of key inflection point, and the market's very good at shaking people out. Certainly when you start to see people like Raoul and others on Twitter say max long. At this point, you know, you've missed quite a lot of the move. But we'll see. We'll see what happens. So I think it is very interesting what's taking place. Stock market in relation to earnings is going to be interesting. Could be a bit of volatility that comes off the back end of it. A lot of stocks at interesting points. Thing is, with all-time highs, you then go into price discovery, which can be very volatile. You know, we think gold's going to do well, so on and so forth. You guys know the story that we've been harping on about. The dollar is doing pretty bad. Again, anybody that's done the course on Patreon, what stage of a market would you think this is in? You know, and then that's very telling to what you should or shouldn't expect. But we are still long Bitcoin, crypto generally. Just to take a quick look at the total too before we move on to this whole liquidity thing. News flow wise, you guys know what's going on with crypto. We've got the likes of BlackRock coming out and saying that it's sees crypto as a global asset. You know, this is huge, and people say, okay, well, why aren't we skyrocket on the back end of that? Well, news is often baked in. You know, that's not quite how the markets work, but we've got a lot of very confirming fundamental things happening to our technicals, and this is the total market cap, barring Bitcoin, and we'll get rid of the target that I've got drawn on here. That I think is interesting. You know, we are long, absolutely long, and we expect that this market is fundamentally changed and that this is now a bull, and we've assessed that for a while now. You're kind of hovering at resistance. You take this resistance, you know, it's full systems ahead. It really is. I mean, even this is consolidating. You're at this key point for the markets. Things look good now until they don't. Until you start to lose support, you expect continuation to the upside and resistance to get taken. We're very, very positive and confident on that right now until we see reason not to be. But that doesn't mean there isn't a spanner thrown into the works. Actually, Gensler almost did us a favor with his, certainly if we look at some of our altcoins like DOT, tyrannical regime, because of the technical structure that this is now setting up in regards to maybe a double bottom and where we think the markets are generally. So generally we're very bullish. It always makes us nervous when we see, your sort of mainstream macro gurus coming out on Twitter and saying stuff like Max Long and this kind of stuff. However, often that does happen, and it's weird that that's happening. We've got the ETF that's been recognised by the SEC now. We will get a spot ETF. I believe they'll go through. We did have a bit of a road bump in regards to them saying that they were insufficient in terms of information, but they then refiled. We think this will go through. And actually that could be a huge catalyst that could see this resistance level getting taken for Bitcoin and with momentum. And that would be very positive for the entire space. Bitcoin dominance is starting to roll, which is good for somebody like me that's a lot more bullish on altcoins than I am Bitcoin. I know that's a sin in the crypto space, but my bet here is essentially that altcoins will outperform Bitcoin. And I don't think that's too much of a crazy bet, given historically what's happened, even with an ETF and things like this. I think actually, Bitcoin is still that tide that rises and sinks all ships. Let's talk about liquidity. And obviously the second bit of news that we had was Ripple and the lawsuit. We know that this has huge ramifications for the entire space, as Ripple was, XRP was deemed a non-security based on things that can be applicable to the entire space. It really, SEC again, they wasn't sure themselves. That's why they could never answer any questions with a straight answer. So they basically went to the courts to try and see what they could get. So it was a total power grab. They lost it. And now, again, at 30K, we've got to see what their retaliation is, because Gensler seems like a very, petty guy. And I think he will retaliate, and what the ramifications of that will be are still to be seen. But this was huge. Ripple says US banks will want to use XRP cryptocurrency after partial victory in SEC fight. Yep, they are already partnered with loads of people. We caught the XRP trade from a leverage point of view. We also caught it from a spot point of view. Let's talk about a liquidity crunch. And this was posted from Hugh. I think these are very well-known stats. Obviously, we interviewed Hugh. We had slightly different opinions on things like Coinbase and even Cathie Wood's ARK ETF, which I don't even like to say that was along, but it was. But this is stock of excess savings across advanced economies. And this is forecast stock of excess savings across advanced economies. And I think this is very reflective of what people would call the liquidity crunch that's being driven by higher interest rates. If you look at this and you actually practically apply this, think about people's mortgages. Whenever I'm at the gym, I hear people talking about it. Wherever I'm running, you often, not that I'm an eavesdropper, but you often hear people talking about how their mortgage has gone up, how this has gone up, how that's gone up, how their car payments have gone up. We've seen cars get hit as a result of this. There is definitely a liquidity crunch of sorts, but I think there's a lot more nuance to it, because there are not equal forces, but both stimulatory forces and damaging forces at play, and which one's greater? And again, I think that if you look at this, for example, this is a collection of 3 different, reverse repo market being one of them, overnight repo, different metrics that kind of act almost as liquidity. So when this goes up, liquidity is increased. When it goes down, vice versa. And this isn't US specific. And you can see the correlation that it has with taking it off log. It becomes a lot more apparent. The stock market, they're quite in tandem, right? And you can see just how it's annoying that it's in a nice Bitcoin orange, the S&P. Let's put it in red. You can see that these are very much moved together, but there's a little bit of a divergence here in them. So I think this is something to watch. They're never perfectly, it did a similar thing here. Diverged. So it's not out of the questions, but there's a number of nuance I think is required when it comes to liquidity. If you were just to trade the M2 and use that as your only barometer for liquidity. Okay, well, okay, and this was one thing we actually used. It kind of didn't call the market great here, but then actually there's been a divergence since September last year. So you've missed out, and it's not been able to accurately predict the market for how many months is that? 8, 9 months. So I think a number of nuances are required. I think credit's always banned at the bottom of a market and then improves as things go on. So I don't really know. I haven't got all the answers on liquidity. One thing I do know is the Treasury are draining the reverse repo market. You know, when the debt ceiling came out, we had all these macro guys, and we're not a macro guy. We're predominantly crypto traders that try and assess everything that's going on elsewhere because it's relevant to our space. But a lot of people were saying, okay, remember what happened the last time they upped the debt ceiling? You know, this led to the repo crisis. And the reason being was because there wasn't a lot of money in the repo crisis. They upped the debt ceiling and started draining it. And then you had this clogging up. And we said, okay, if you can't spot as a 40-year macro analyzer the differences between that taking place in relation to the repo market and where the repo market is today, there's something seriously wrong. I mean, this chart actually paints quite an interesting picture because I actually think March 2020 and the whole crisis that the yield curve predicted perhaps was a massive bank bailout in many forms, as well as a number of other things. And you can see that this is untold levels in regards to the reserve repo market. This is starting to come back into almost the economy in the form of new debt issued. And there's an alarming point here with how much this is coming down. And is that going to continue to be the case? We will see. But I think there's a lot more nuance to them pulling money out of this market, going into this market, to the liquidity crisis than people give it credit. I'm not 100% sure. I think that there are, and I partly agree with the bears. I just think that the timing of the bears is significantly off. You know, if we look at the yield curve, the yield curve has quite accurately predicted every single major crash that's taken place for a long time now. But it usually doesn't occur at point of max inversion. So we spoke about this window of opportunity, and actually from point of max inversion, often the markets rally. And then it happens after the fact. So there still is this dark cloud over us. I do think it's debt related, but I think there's this window of opportunity, and I think there's a lot more nuance that's required than just straightforward answers. And hopefully we're trying to navigate a little bit of that. So on the liquidity subject, I'm not 100% sure. I think there's two forces at work here, one negative, one positive for the markets. Right now, the market seems to be going with a positive one, but I do think there are real issues. I think it's very interesting that crypto's at this kind of pivotal level right now. Remember, we've got the halvening coming up and all this kind of stuff. It's going to be interesting to see what happens. I always get a little bit nervous when you start to see people coming out and saying max long, but we still do have a bias based on a number of things for continuation and more upside. We think internally crypto's having a great time and there's huge wins taking place for it. We also think technically it looks good, and we think on a kind of macro level it looks good. Yes, of course, there are factors that aren't great, but if you look at how the market's reacting to those, you know, you got to remember that headlines and news flow, the headlines up here were brilliant, the headlines down here were horrific, and actually it should have been the opposite in terms of how you wanted to position. You didn't want to position based on headlines. So we'll keep you up to date. We'll try and work all this out. I think it's a mammoth task, as I'm not a macro guy. We do have macro people that we talk to that are far more informative, and we're going to get a lot more of them back on the show to kind of help us work all this out. But we think there's nuance required when it comes to this whole liquidity crisis. There is definitely a liquidity crisis showing up. It's one reason we've got such deflation. The Fed are set again to do another 25 basis points. I think it's 90+% probability of them doing this, according to the Fed Watch. I think it's a token gesture. I think it's irrelevant, to be honest, at this point. And if that's the last one that they're going to do, then happy days. You know, we know what the market's going to do under that context. And we don't think they should be doing one when inflation's where it's at. You know, I think it's added strain that they don't really need to induce. But hey ho, again, at what point does QT become QE in regards to the money that you have to then print, quote unquote? It's not really, it is kind of printing to then keep up with the payments that you've caused based on the interest rate that you've set. It's very interesting. I think if Stan Druckenmiller has came out and said it's one of the hardest and most complex macro environments that he's ever had to navigate, you know, we're not going to try and make 100% sense of it, although we're trying to make as much sense of it as possible. I think, and this is where technicals really matter, from a technical point of view, I think Bitcoin and crypto looks great. And you're in this kind of, Bitcoin's leading the way, you're in this pre-stage to what Bitcoin's in situation for altcoins that ultimately is going to lead to something similar to what's happened with Bitcoin and hopefully a beautiful rally. And there's a number of reasons to suspect this, but there is reasons to be concerned moving further on down the line in regards to things like liquidity, which I think is nuanced and there's two sides to it. So that's all I've got for you in this video, guys. Hopefully you've enjoyed it. A bit more of a kind of technical, boring macro-y one, but it is important not just to focus on moon boy, bullish everything, and to kind of also check myself and say, okay, there is a bit of a problem with liquidity, but is there alternative factors? Is that just one side of the story? Is there another side of the story to it? What do we think technically about the charts? We're at this key level right now. It's very interesting. These weekly candles, I think, for Bitcoin are, I wouldn't say concerning. If you put a Bollinger Band or something on, this is kind of what Bollingers do. They look for points of constricted liquidity that can often lead to breakouts. You can see that's historically true. If you look at this here, for example, you consolidating around this kind of key level. Then you break, you come back to retest, very textbook, and then you see that continuation again on constricted kind of uncertain candles. Here's a good example as well. So we'll see. But we'll keep you up to date on this channel. Again, if you've enjoyed the content, like us, appreciate it as a comment. Don't forget to hit that subscribe button, and I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gentlemen. See you in the next one.